Everyone is fearing another economic downturn, and this is why everyone seems to be talking about yet another U.S. recession. At the beginning of 2022, we witnessed two decreases in GDP readings in the first two quarters, only to see it rebound in the third. So what is the worry about? Well, given that we just finished the last recession we've lived through during the pandemic, everyone is still on edge, and investors are keeping a sharp eye on the latest stock market news. It is true that the recession of 2020 was the shortest global recession, officially ending in April 2020 and only lasting 3 months. However, its effects took their toll on the economy. Until July 2022, the U.S. was still recovering from the high unemployment rate and the 21 million lost jobs. So if there is talk about a 2022 recession or even an upcoming 2023 recession, we need to be prepared. This is why we will be discussing in this video everything you need to know about recessions. We will start with what recessions are, what causes them, and their effects on the stock market. We will also go over what a recession means for real estate investing and its connection to U.S. inflation. Most importantly, we will talk about what a recession should mean to you and what you can do during such times. The talk of a recession is one of the scariest things an investor can hear, and it is understandably so. A recession usually translates to a stock market crash, a collapse in the housing market, and another surge of unemployment. But you should know that a recession, with its downsides, is a part of a vibrant economy, and it eventually leads to great opportunities if you understand it well. Hello and welcome back to Ring of Knowledge. We provide trustworthy information on personal finance, investing, financial literacy, and businesses so that you can make informed decisions for your future. So without wasting much time, let's get started learning about recessions and see what you can ultimately do to come out of one as a winner. 1. Understanding a recession. When we notice a substantial decline in the U.S. or global economy, we would know that we are in a recession. Such a decline can last for months or even years. Usually, a recession is officially declared by experts when the country's GDP turns negative for 2 or more quarters in a row. There is a high unemployment level, and retail sales across different sectors witness a significant decline. In short, a recession is when the economy suffers and a country's economic output overall regresses. 2. Recession versus depression. Why do we call it a recession? Simply put, the term depression sounds particularly horrifying, and it technically is. Economically speaking, depression is only used to refer to an enormously sharp and unmanageable recession. So even though the pandemic recession witnessed one of the highest unemployment rates since before the Second World War, it was still deemed as a recession. As a matter of fact, since World War II, we've witnessed only one depression, yet we've been through 10 recessions. Recessions are actually a normal part of the economic cycle. 3. The business cycle. A business cycle is the economy's alternation between a recession and an expansion. So going through a recession is a natural phenomenon in every economy. When the economic state of a country is healthy and growing steadily, expansion begins. During such times, it would be easy for people to borrow money, leading to a lot of debt. The indulgence and cheerfulness everyone would be living through would end up surpassing asset prices. In such a case, the values of assets begin to rise and debt increases. At some point, one of the mentioned causes of recession happens and the economy starts to head toward a recession period. That is when the stock market crashes and the large loads of debt become too expensive. 4. History of U.S. recessions. Going over the history of recessions will help us get an overview of how long they typically last. We've already covered the short length of the pandemic recession, but there are recessions that last for years at a time. On average, a recession could last up to almost a year and a half. However, ever since 1857, when James Buchanan was president, recessions have been much less severe and much shorter than that. Yet ever since that time, the U.S. witnessed 2 rather long ones. The 1873 recession lasted almost 5.5 years, and the Great Depression of the 20s, during which the U.S. didn't recover until after 10 years. 5. The causes of recessions. There are many ways that can propel an economy to go into a recession, and here are some of the phenomena responsible. 1. A sudden shock in the economy. This is when something unexpected severely and quickly damages the economy. The embargo that was imposed against the U.S. by OPEC in 1973 is an example of an economic shock. The pandemic of 2020 is another more recent one. 2. Market inflation. When we are living in a strong economy, we are inclined to invest more in stocks and real estate, causing excessive inflation. At this point, the Federal Reserve and central banks aim at controlling this inflation. The Fed would immediately start raising interest rates, which usually leads to a recession. 3. Market deflation. If too much inflation is dangerous, deflation is actually worse. When prices start declining, wages follow, causing more decline in prices. If deflation becomes uncontrollable, the spending stops and the economy declines. It is extremely difficult for central banks to recover from a recession caused by deflation. 4. Politics. Sometimes badly planned legislation might greatly affect the economy of a country. An example is the Smoot-Hawley Tariff Act signed by President Hoover in 1930. This happened during the Great Depression to regulate international commerce by increasing import duties by 20% on imported goods. This has made an already bad situation worse as international trade significantly decreased. 6. Effects of a recession. There are many negative effects that occur on the economy during a recession. Most, if not all businesses, witness a substantial decline in profits and sales. This usually leads to them trying to cut costs, which translates to laying off as many employees as they can afford. Jobs are lost and unemployment rates skyrocket. On another hand, we witness the plummeting of stock prices, and dividend stocks also tend to fall. With a volatile market, investors usually hurry to pull out their money, while some businesses start to drastically cut or even end up eliminating completely their dividends. 7. Signs and indicators of a recession. After knowing such scary facts about recessions, you might wonder if there are any signs that indicate that we are heading towards one. Although economists try to predict whether a recession is near, any forecast in that regard remains uncertain. But there are some signs that act as indicators that something wrong is about to happen. The most obvious signs are a decline in profits in businesses and a higher unemployment rate. A sudden stock market decline is another sign that a recession is looming. And if you are an investor, then you should know that an inverted yield curve is yet another indicator of a recession. A good economy is reflected in high yields on long-term bonds. But when looking at the yield curve graph and seeing that long-term yields are lower than short-term ones, investors start to worry about a recession, and they are most probably right. 8. The effect of a recession on you. You now already know a lot more about recessions, but what are the direct effects of a recession on you personally? We've already mentioned that unemployment levels tend to rise during a recession, so the first thing you might encounter is losing your job, and you would find it difficult to find another. During the pandemic's recession, many people tried to work from home, but several businesses went bankrupt and couldn't go on, pushing the unemployment rate to 13% in 2020. If you are an investor, you should know that investments in stocks, real estate, bonds, and any other assets would lose you money during a recession. This ultimately affects every investor's passive income and retirement plans. And although all of this sounds really scary, always remember that recessions do not last forever, and in more recent decades, they do not last for long either. 9. What should you do during a recession? So what can you do if we're headed towards a recession? You can start planning right to protect your investments and your retirement funds. The one piece of advice every economist gives you is to diversify. Invest in domestic as well as international funds and choose mutual funds with a high value. Secondly, when faced with a recession, welcome it by paying off your credit card debt. And then, start by buying stocks as soon as a recession is officially announced. This is because when it is time for the economic rise, stock prices will begin to increase in price. 10. What a recession can teach you. There are many things you can learn from understanding a recession. First, do not buy things you cannot afford and put yourself into debt you cannot pay off. This is eventually one of the reasons that lead us to recessions. No matter how cheerful the economic state appears to be, remember the business cycle and always be prepared for you to witness the plunge back down. So whatever debt you get into might just come back to haunt you. Taking one of the smallest examples, let's say you've seen some shoes that you like and charge them on your credit card. That $200 pair of shoes might cost you $600 by the time you end up paying off its interest on the credit card. So imagine buying a house, a car, or something that costs thousands of dollars more. Recession can teach you only to spend what you can afford and to avoid piling up debt. Maybe if we all follow the advice, we might end up avoiding a recession altogether. So now that you are more knowledgeable on recessions, let us know if you think we are heading towards one in 2023 and what you will be doing to avoid any damages during such rough times. Is there anything new you've learned about recessions, and what is something you think you would start doing differently from now on? Are you worried about losing your job? Share with us your thoughts in the comments down below. And don't forget to give the video a thumbs up and hit that subscribe button to never miss content such as this one. See you in the next video.